I'm Michael Fox, and this is the Prospector Podcast. And I have joining me today, I have the President and CEO of Highland Copper, Barry O'Shea. Welcome, Barry.
Thanks, Michael. It's nice to be here.
Yes, we've been working on having you on for quite some time. This is a real interesting project, and I'm quite excited to get an update and a big picture view of it from you. But for our listeners that may not be familiar with Highland Copper, let's give them the 10,000 foot view of the company.
Yeah, sure. So there are two assets inside Highland Copper. First of all, there's the Copperwood project. We own that 100%. Interestingly, it's a fully permitted project. And then down the road about an hour, we have a second project, or I should say a joint venture interest, a 34% stake in the White Pine project. And they're both in the Upper Peninsula of Michigan. It's a really wonderful historic mining district. To give you a sense, some of the residents there refer to it as the copper country. So it helps you understand the nostalgia there is there for mining. And that's relevant. Obviously, having permits in hand is wonderful. Having social license to operate regionally is also really important. And for Copperwood specifically, that's our priority. We own it 100%. We control the project. And I consider it, one of the most advanced copper projects in the US from a development perspective, meaning permits in hand, feasibility study complete. We actually started some early site work there to prepare the site for construction, ideally in 2026. And importantly, we've initiated all of our detailed engineering work packages. So really well advanced. And, Michael, one thing you might know is that in the US, from first drill hole to production, it's in the range of 20 years. So having all of the work done that we have done, we're arguably at year 16 or 17, one more year through to engineering construction decision, and then a couple of year construction window. So really in that context, very near dated and very well set up to help the US, who quite urgently needs copper supply.
Yeah, no, definitely. You're a very well down the road development project. What I always found intriguing, though, because when I think of copper in the United States, I always think of Arizona, and Michigan isn't on my radar, but there is a long history of copper in Michigan that stretches back decades. Can you put a little bit more meat on that?
It goes back even more than a century. Copper was mined in the early to mid 1800s. And as a matter of fact, the last project that closed down on the western Upper Peninsula was actually the White Pine project, the one that we are 34% joint venture interest in. And that was in the mid to late 1990s. So, it's a little less known, arguably, to investors over the past couple of decades, but there is a very long history. Interestingly, one of the projects that did come back into the region in the last 10 to 15 years is Lundene's Eagle Mine. They're operating a really nice nickel copper deposit on the eastern side of the Upper Peninsula. They've actually done a great job, right? Bringing mining back into the region. It's been a strong economic boost for the area. And at the same time, they've had a really strong environmental track record. And that's another thing that is really important to us as we think about operating in the UP.
Yeah, no, definitely. Now, copper is starting to have its day back in the sun again. The United States government just released an updated critical metals list, and copper's made its way on that list. To be personally frank, I was surprised it wasn't on that list prior to this, but it's on the list now. Tell me how significant that is for your business, especially when you're getting this close to a construction decision.
Yeah, I think it's incredibly significant. And it's a real sign that, critical minerals in the US and copper specifically, it's one of the very few, what I'd say, nonpartisan topics. And everyone agrees that the US, quite candidly, is quite behind China from a mineral development perspective. And they're taking real steps. And that's why I think we've seen copper come onto the critical mineral list at this point in time. I think what the US has identified is that copper is central to both energy and defense strategy. And it's probably that defense piece that has emerged most recently. The Department of Defense actually identified that copper is the second most widely used material in their department as you think about ammunition, tanks, ground support vehicles, airplanes, and whatnot. So that understanding, the reliance that the U.S. has on imports from a copper perspective really is a challenge to policy on both energy and defense. And so there's a real read through here. Obviously, for certain companies, copper being on the list is important from a permitting perspective. That's a little less relevant for us. Obviously, I mentioned we operate on private land in the U.S., so no federal nexus. And we have all of our state permits. That's a wonderful thing. Where it's a little more relevant for us is access to funding. And I think what the U.S. government is doing at the moment to really play a part in incentivizing mineral and mining development is that they're looking to fund, and they're being very creative. We've seen the Department of Defense put funding in the form of grants, equity, commodity floor prices, and other things. So it's a pretty exciting time from that perspective, when these priorities are nicely aligning up.
Yeah, well, prior to this announcement, though, from the federal government about adding copper to the critical metals, within the government, there's the Import-Export Bank of America, and they were already taking a lot of strategic funding announcements to the copper industry across the country, including you folks. With it now becoming a critical metal, does that increase the ability for them to fund you even further than the initial, I believe it was 25 million that they've made available to you?
Yeah, it's actually 250 million. So
I missed
just
a
one.
decimal,
No, that's
sorry.
okay. No, all good. Just one extra zero, and that number is very relevant. Our initial capital requirement to build the Copperwood project is a little over 400 million. So that letter of interest from the US Exim Bank is giving us visibility to 60% of the project's capital needs. And yeah, I think that copper now becoming critical, just enhances our likelihood of converting that letter of interest to a full and formal definitive agreement from financing that's underwritten by the federal government. And I think, part of the relevance there is that that type of debt, in our view, would likely come with better commercial terms than we may see on the private markets. Naturally, that's a real positive as we think about financing, and certainly in the context of smaller companies where cost of capital is increasingly important. So really important to see that advancing. You're right, Exim is advancing on other companies as well. And I think it's great. At the end of the day, it's going to take a whole range of projects to assist the U.S. in its supply-demand imbalance. And it's not just Exim, but we're seeing other U.S. departments take part here.
Yeah, surprisingly, actually, we're seeing government actually stepping up to the plate with investment into the shares of the companies through the Department of Defense, Department of Energy. As it's now a critical metal, are you seeing any signs that, the government of the United States could be coming on board as a shareholder?
Certainly that's a possibility. You're right. I think we've seen recently the US government make direct equity investments into mining projects. I think that is a possibility for us. And there's a host of ways that the Department of Defense are playing a role here. As you mentioned, there's also grants. And interestingly, they, set a floor price for MP metals, another kind of creative and interesting way that the US is taking part. One other thing we're seeing is the US stand alongside private entities. So Orion Mine Finance, they own 28% of our company. They announced just a couple of weeks ago that they've kind of gone in partnership with a US federal agency to put a consortium together for a $1.8 billion fund with a specific mandate to move forward late stage projects in the US. So not necessarily early development projects. Again, a really nice sign for companies like us on that latter part of the development cycle, and also to see federal arms of the government taking part, in this instance with one of our shareholders. So I think very exciting times. And one other piece I'd just say, just from an investment perspective, is that when you start getting endorsements and support from federal and state governments, it also makes mining just increasingly investable for private investors. And I think that's important because over the last decade or two, mining has arguably been underinvested in.
Yeah, and arguably still is underinvested.
Sure. Absolutely.
Now, You're fortunate. You actually have a very strong shareholder base. You mentioned Orion, but you've got a number of shareholders that have been there for a long time with substantial positions. Can you elaborate on how the shares are held in the company?
Yeah, of course I can. And that long-term support is important to talk about that 20-year cycle to bring projects through to construction and development. The fact that we find ourselves at the very latter stages of that cycle is a good sign that our long-term shareholders have really stuck with us. And yes, Orion Mine Finance sits at the top of that list. They own 28% of our company. From an early stage, they recognized, I think, the value in US domestic copper production, and certainly we're seeing that playing out now. Our other key shareholder is a natural resource fund out of Texas. They're called Condir. Interestingly, just a week or so ago, they actually increased their position from 16% to just under 20%. And that was part of a block trade done with a third investor who had owned 16% of our company, Greenstone Natural Resources Fund out of the UK. And they actually were in the process of broadly winding down their fund and naturally needed to liquidate their investment in Highland Copper. So over the last couple of weeks, we assisted in facilitating a really nice trade where that 16% was sold out of Greenstone, as I mentioned, in part into Condir, who increased their position, but a host of other nice institutional names. And it was a really nice to see, the demand that came through that block trade, obviously adding institutional investors, reducing our shareholder concentration, I think, which was also positive, and increasing our trading float. So overall, just from a trading perspective, a very good thing for the company.
And right now, you guys are well financed to do a lot of the preliminary engineering work that finalizes your bankable feasibility and leads you to your construction decision.
Yeah, so that's right. As I mentioned, we initiated through 2025 all of the detailed engineering packages that we need to defend ourselves in a debt financing through 2026. So on the mine side, process side, tailings and water management. Our goal broadly is to get the project to about 40% engineered. We think that's about the right amount of engineering so that we have a good and clear understanding and update of the capital and operating costs, be fully final on all design criteria, and also be able to defend ourselves as you know, when you step into a debt financing, whether that is with the US Exim Bank or any other debt provider, you need to have a very clear understanding of risk, costs, and schedules. So I think we're very well placed from that perspective. Going through that engineering as well has also provided us a really nice opportunity to think about how we can improve the project. And we're certainly looking to make optimizations on both the process side as well as the mine side.
Yeah, and that's key because it has to be economical to move a project forward, and the preliminary economics on this project actually look very substantially very good. Can you talk about the economics of the project and how the engineering can maybe improve on those economics?
Yeah, absolutely. So as a starting point, we did our feasibility study actually at a $4 copper price. I think today copper is sitting nicely above $5 per pound. And the economics at $4 are actually pretty robust. It's about 170 million NPV and an 18% IRR. But what's really interesting is the leverage to changes in copper price. That simple increase of a 25% from $4 to $5 copper actually triples the net asset value of Copperwood to about 507 million. And bear in mind, that only includes the initial mine life of 11 years. Remember, we're very well advanced, meaning we're at feasibility level and reserve status. From a mine planning perspective, that means you only use your measured and indicated resources. We have inferred resources equal to and beyond the M&I value. So we certainly see this as a 15 to 20-year mine life as we progress. And there are other ways to improve that economics, beyond that $500 million valuation. And most specifically, one of the areas we've had, let's say, the most impact is on the metallurgical side. And maybe I'll give a shout out to our project director, Wijnand van Dijk. He's PhD in extractive metallurgy. I hired him a year ago, and he identified very early that our process flow sheet was really amenable to ultrafine flotation technology, so the Jameson Cell. So over the past 6 to 9 months, we've done comprehensive testing, drilling, and really worked through this alongside Glencore Technology, who own the Jameson Cell technology. And at the end, the result was about a 2 percentage point increase in copper recoveries beyond what was stated in the feasibility study at lower operating costs, because we're looking at reducing power and reagents and broadly just drawing down the size of the overall process plant. So nice from an environmental perspective as well. So those are all ways that we can, continue to advance the economics of that $5 copper price, even beyond that $500 million, setting a really nice asset value, as a multiple of our initial capital of 400 million, and really setting ourselves well for financing as we step into 2026.
If the copper prices remain up at the $5 level, as you mentioned, does it make the financing easier to obtain at that level than whereas, in the pre-feasibility study?
Yeah, naturally it does. At higher copper prices, obviously the project is more robust from a debt perspective, thinking about repayment. So that speaks to the cost of capital that you can attain. But importantly, once you have your debt financing complete, on the other side of that, there's going to be the equity component that you need for the project, and of course, equity investors need higher returns. This project works nicely at $4, very well at 4.50. But once you're at 5 and beyond, that leverage to copper prices really gives a torque from an investment perspective. And as you find yourself, seeing leverage from a copper price perspective, that's naturally positive for the net asset value of the project, as is the optimizations that we're working on. But as you're transitioning to development and production, you also look at different valuation multiples, specifically cash flow multiples, as you think stepping into production. So, just a really nice opportunity from two perspectives there as we think about shareholder growth and investments.
Now, one of the challenges in the United States as far as copper goes is the processing. There's a lack of smelting. Using this flotation method for extraction, does that do anything to eliminate the need for smelting? And does that help the process moving forward?
Well, we will still be, even in that instance, generating a 25% con. So yeah, no, it will need to be refined. And, I will say, the US, similar to looking at incentivizing mining and extraction, they're also looking at ways that they can impact their other issue, which is refining capacity. It is limited. Now, we do have options in the US, and we'll work those through. So we don't have major concern from that perspective. The con that we have is a nice clean con, and certainly desired by the refiners. And so there are a number of options that we have from that perspective.
Wonderful. So we know what the economics are. We're working through the engineering to get it to 40% of the needed engineering so that you guys can make a construction decision. What's the timeline look from now until assuming a positive construction decision to this is actually a functioning mine?
Yeah, so yeah, as you say, we'll continue our engineering through into 2026. So it'll be the second half of 2026 that we think would be at about that 40% engineered. At the appropriate time, we'll fully parallel the financing pieces. So kicking off our formal process kind of post LOI with the US Exim Bank, and also considering other alternative sources of debt. So the goal would be that we'd have our engineering and broadly a solid understanding of our financing as we get into the second half of 2026. And we're really with a goal through that point to make a full and formal construction decision. And assuming you can get to that point, it's only a 2 to 2.5 year construction window to get to full run rate production. So in that example, you're producing into the 2028, 2029 timeframe. Again, very near dated against the context of a 20-year cycle.
Yeah, very, very much so. But as you had suggested, you'd already had about 16, 17 years to get you to this point of time. So you're right within that kind of 20-year time cycle that from, initial discovery to being a mine, and you're nicely positioned to get there quickly.
That's right. I wish I could say we were bucking that really long timeline and trend, but it is what it is. It does tell you that for others that are at that early stage, there's a long way to go. And for us, we're right on the doorstep.
Yeah, it's good to have all that water already under the bridge, and you see the sunlight coming pretty quick. So if people want to continue to follow this story, Barry, it's exciting. It looks like it's going to be a near-term copper mine in the United States, which needs the product. How would they do so?
Yeah, so listen, obviously come to our website, sign up for our newsletter. We do our best to keep our investors obviously updated through news releases as we progress, both at Copperwood, but also as our partners Kinterra progress the White Pine project. Certainly don't want that value to be lost there. It's a valuable piece of our story. Yeah, we trade on the TSX-V under the symbol HI and on the OTCQB under HDRSF. And listen, we're always open to discussion. So if there are investors that want to inquire at our website or directly with me, always very happy to talk about our company.
Yeah, folks, Barry's very approachable, and he makes this exciting opportunity accessible to people to understand. So these are all good attributes, and I would recommend if you're looking at this as a possibility, reach out to Barry. He's more than happy to answer your questions. So thank you very much for joining me, and I look forward to having you back on down the road as this progresses to a construction decision.
Thanks very much for your time, Michael.
Thank you. Highland Copper is a paid sponsor of the Prospector News. The Prospector News podcast is for educational purposes only. The opinions expressed are those of the participants and are not to be taken as investment advice. Listeners need to do their own due diligence and seek advice of a licensed investment advisor.